Top tick needs a lot of context. It could also just be a coincidence that we top ticked and not due to a high limit order there. Shouldn't we always keep the vol and bookmap in consideration for this? Okay, so for context, if we have a resistance level, and then price approaches the resistance level, and then it tags it perfectly to the exact perfect tick, and then it reverses. So imagine that this resistance is like the highest point. So let's say it's $10.11, and then price hit exactly $10.11 and then started reversing. This would be a top tick. And if it hits the level perfectly, and then it starts trading in the opposite direction, so let's say it hits the level perfectly and then the next candle is a red candle, this would be a fantastic signal for a short in the opposite direction, because it shows that whatever limit orders were available at that resistance level, they were partially filled by the market orders that were executed into that level. Most of the time, people have their stop losses at these swing highs and swing lows, and most of the time when those stop losses are executed, the size of the aggregate, the total stop losses plus the size of the total market buys from people who are trying to enter a breakout trade, most of the time it will exceed the available liquidity, or how much is totally available in limit orders at this specific level. Most of the time it will exceed it. And that is why even if price was to reverse, most of the time price would at least trade through the level a little bit before reversing. Most of the time, this is how it looks like. On the reversals and on the breakouts, it would go. So the fact that price hits the level perfectly and then starts trading in the opposite direction, this is actually an anomaly. It's an outlier. It's an abnormal behavior. It's very abnormal for these limit orders to be partially filled by all the market buy orders from people trying to enter breakouts, and all the market buy orders from the short positions that were just recently stuffed out. It's very abnormal. So this could mean two things. One, it could mean that the size of this the size of the limit orders that were present on that level were enormous, so big to the point where they absorbed all of those market buys. And that means that someone really badly wants to get short, so they get partially filled on their short, and then with whatever leftover is remaining, they will fill the remaining of their position with market sell orders, and they'll basically help contribute to pushing the price down. And any of the traders that were stuck from long up here, they end up puking their position and also contributing to pushing the price down. That is why short term, this can act as a really good reversal signal. So that's reason number one. Reason number two is there's just barely anyone who's willing to market buy. If there's barely anyone willing to market buy, but there's still a normal, reasonable amount of people who are willing to sell, just because of that imbalance, price just gradually drifts down. But the point is, in both cases, or even if both cases are simultaneously true, price a lot of the time ends up drifting down. So the question here is, this specific pattern needs a lot of context, because it could have just top ticked this level by coincidence. True, very true. Something that increases the quality of this top tick signal are two things. So, and they're somewhat correlated, but still. The first one is, what is the amount of time spent from this level? So if this is like a level that was formed 1 minute ago, and then it just so happened to be top ticked, it top ticked a level, so it returned to a price that it traded at 60 seconds ago, and then it starts trading in the opposite direction, it's not that significant, right? Whereas if this was a level that was formed like 17 days ago and it top ticked and now it's starting to trade in the opposite direction, that's a much bigger deal. So the first one is time spent away from the level. The second one is, what was the market orders, what was the volume that was executed on that top tick candle? So if this is the resistance and then price top ticked it like that, what was and then let's say that's the previous candle, let's say this is the next candle, and this candle is red, and it top ticked this level. What was the volume on this specific candle? And we're not looking at the exact dollar amount. we're looking at what was the volume relative to whatever the average volume is. So if the higher it is relative to the average volume, the better it is for the reversal. The lower it is relative to the average volume, the worse it is for the reversal. Because when we have huge volume that happen to be partially filled, then we can lean more in the direction of the idea of, okay, someone just really, really badly wanted to short this level, and now they've basically entered their short, or they have a huge position that they're trying to take profit on, and they got partially filled, right? In both instances, if someone is really massively trying to get short and then price starts moving away from their entry, most of the time they'll start slamming market sells, and they'll try and get an average entry price, right? So they try to get filled for as much as they can for the best price they can, and then once their idea starts getting validated, they'll add on the rest with market sells. That's for someone trying to enter a big short. For someone who's trying to close out of a huge long, they get partially filled on their take profit, then price starts drifting down. They're like, oh crap, I really want to get out of this long because my trade idea is already concluded. I just want to get out of this trade. Just get me out of this trade. So they got out for as much as they could on the level, and then they market sell out for as much as they possibly can as price starts drifting down. But the point is that in these huge volume scenarios where the top tick candle has huge volume, this gives us a lot more confidence. If the volume was tiny and it happened to top ticket, that's when it's like, it could have just been a coincidence. Not entirely sure. It could have just been a coincidence. But okay, let's keep going. But should we always keep the vol and book map in consideration for this? Book map as in the depth of market? Yes. Yeah. I would have that open. But the thing is that it's unlikely. Oh, I wrote this here. It's actually unlikely to witness a partial fill happen right in front of your eyes, right? Very unlikely that you open up a coin, you open up a random coin, and then a partial fill just so happens to appear on your chart. Quite unlikely. It's more likely that that you open up a chart and the partial fill has already happened, and you're just waiting for that next candle to form. That's like, at least from personal experience. Like, this is if you're like screening for a coin, and that's what happens. Therefore, I don't think the book map is going to be that super duper relevant for all the time. But I mean, sure, I think just having the depth of market just open for you to look at, just in general, is a good idea. Not necessary, but it's a good idea. But I wrote here that at least for me, I will see the partial fill happen like in front of my eyes most of the time when A, my own limit order entry gets partialed, or 2, when my TP gets partialed. So when my entry gets partialed, exactly how I described, if my entry gets partialed and then price starts moving it away from it, moving away from my entry. So let's say I'm the one trying to get short, and then I get partially filled short, and then price starts moving in my preferred favor. I'm going to be like, wow, my entry was literally flawless because I went into 0% drawdown. Whatever the rest of my position is, I'm just going to get filled with market orders, and I'll just slam into a market order on the rest of the position. The same goes for taking profit, as I mentioned earlier. So I'm trying to get out of a trade at this level. I get partially filled. Let's say 50% of my position gets filled, and then price starts turning around in the opposite direction. I'm saying, well, hold on. Why am I still long? I don't want to be in this long anymore. Get me out. So I'll just market close out of the rest. And even potentially, it depends, but I could even cut in reverse, flip short, and target whatever the original entry is. The reason why is because so many of the time when my TP has been partialed, there's been let's say this is my entry, this is my TP, price does something like this, my TP gets partialed, and then price turns around. Very high percentage of my trades actually return back to the entry. Therefore, I have this little rule where if my target gets partialed, I'll actually flip short here, and then I will target here, and then my stop loss will be the place where I got partialed, or maybe slightly above the place where I got partialed.